2025, a pivotal year in the ongoing trade war between the world's two largest economies, the United States and China. So, what's at stake? Could this lead to a global economic collapse? And how can you take advantage of this massive geopolitical shift? Welcome to Investing Future Now, where we break down complex economic issues in simple terms. Today, let's swing deep into the trade war between the US and China in 2025. Is this the beginning of an economic collapse? Or are there opportunities for savvy investors and businesses? Let's break it down. Let's start with the basics. The US-China trade war has been going on for years, but 2025 marks a new phase. The US has imposed more aggressive tariffs on Chinese goods, and China is retaliating with its own economic strategies. This includes currency manipulation, targeting US companies operating in China, and even pushing back on US agricultural imports. In 2025, these tensions have escalated further, with both countries locking down stricter policies. The US is trying to decouple from China's supply chains, while China focuses on self-sufficiency and leveraging its growing technological sector. But what does this mean for the world? Well, the global economy is feeling the pinch. Markets are fluctuating, international supply chains are disrupted, and countries that depend on exports to the US or China are in a tough spot. Global growth projections are lower. Some industries are collapsing, while others are thriving. The financial world is uncertain, and that can be a recipe for a global recession. So, are we heading toward an economic collapse? Well, it's complicated. The risk of a global recession has increased, especially if the trade war escalates further. But it's not all doom and gloom. While some sectors are struggling, others are adapting and finding new opportunities. 1. Decoupling of supply chains. The US and China are increasingly trying to isolate their economies. This means new opportunities in markets outside of China. Southeast Asia, India, and even parts of Africa are becoming new manufacturing hubs. 2. Tech wars. China and the US are both investing heavily in emerging technologies, especially AI, 5G, and clean energy. If you're an investor, this could be a huge opportunity. 3. Currency volatility. With the ongoing trade tensions, expect a lot of volatility in currencies. The Chinese yuan and the US dollar are particularly volatile, which could offer opportunities in forex markets. 4. Shifting trade alliances. Countries are pivoting to new trade partners as the US and China become more isolated. Look for emerging trade routes in countries like India, Japan, and even Africa. So, how can you take advantage of this situation? First, it's about positioning yourself ahead of the curve. 1. Invest in emerging markets. As China and the US pivot away from each other, look to emerging economies. Countries that were previously dependent on China for exports are shifting toward new partners. Think Southeast Asia, India, and Latin America. 2. Diversify your investments. If you're an investor, diversify your portfolio. The traditional stock market is volatile, but emerging sectors like green energy, tech, and healthcare could be more resilient. 3. Explore digital assets. With the risk of fiat currency devaluation and inflation, digital currencies and assets like Bitcoin are becoming increasingly popular. Many are seeing it as a hedge against currency risk. 4. Stay agile in business. If you're a business owner, look to diversify your supply chain. This means sourcing materials from other regions or investing in new technologies that can give you a competitive edge. Host. So, the US-China trade war in 2025 is a defining moment in global economics. While the risk of an economic collapse is there, it's not guaranteed. Instead, The smart move is to understand the trends and adapt. Whether you're an investor or a business owner, there are still opportunities out there for those who know where to look. Make sure you stay informed, and don't forget to hit that subscribe button for more updates on the trade war and the global economy. Until next time, stay ahead of the curve. Invest in tomorrow today.